Hi guys, so just looking over ahead at the key events and themes this week, let's start off in the UK with the pound. We do have UK GDP data now. In terms of growth at the moment, at the lowest since 2013. So it shows really how much the economy is underperforming. Currently around 0.3%, not expecting any growth there. And there's a few reasons as to why it could even get worse. Now we're seeing a contraction in consumer spending in the UK. Wages at the moment, people are still not getting paid enough. That remains very much subdued, and inflation is still expected to continue to creep high. Obviously we saw it producing a number of 3%, the highest in 5 years for the UK. What does this mean for monetary policy in the pound? Well, the Bank of England in recent rhetoric have noted that if inflation pressures continue, but also we see economic growth growing at full capacity, then they will look at raising rates. However, obviously, yes, we're seeing inflation continue to creep higher at quite a fast pace, but economic conditions or growth really isn't where it needs to be at the moment. It's actually, if anything, moving in the opposite direction. So if they go and raise rates, this could be too premature and could really have catastrophic effects on the UK economy. Elsewhere, looking over in Canada then, just quickly recapping on Friday, we did see a large amount of Canadian dollar weakness on the back of two bits of data. It's one, CPI, showing that it's not growing, it's actually subdued, moving in the wrong direction the Bank of Canada wants it to. And two, we saw a contraction in consumer spending. Now, this week we do have the Bank of Canada's monetary policy announcement, their rate decision. For me personally, I think they could take a few steps back. Now, if you recall, they did note that in terms of rhetoric at their last decision, they did actually note that policy could move in either direction, and it's very much going to be driven by data. And one of those key bits of data being inflation, and they were actually expecting for it to pick up quite quickly in the short term. However, that hasn't materialized whatsoever. As I've said, we've seen that move lower in terms of inflation. Retail sales lower in Canada as well. So in terms of what to look out for in this time round, well, as I've said, they moved too quickly. They raised rates back to back on 2 months, really catching the markets off guard on both occasions. And for me, I thought that was a bit too premature. Yes, the economy was shaping up well, and I understood them seeing inflation picking up gradually, but I think they're moving too fast there. So in terms of the Governor Poloz, we could see him just producing a little bit of dovish rhetoric, which could really weigh on the Canadian dollar, as we've already seen. So this could be the case for it to remain soft heading into decision, and also it really could, the floodgates could open to some Canadian dollar weakness on the back of his statement. Looking over in Europe then, we do have the ECB's rate decision, which the markets have been waiting for quite some time now. In terms of heading into this, we've seen little in the way of progression for both wages and also CPI, the two key barometers that Draghi has been mentioning time and time again in his recent speeches. So with that in mind, in terms of what to expect this time round for the rate decision, I don't think we're going to see any shift or any indications of QE tapering anytime soon. Well, if you look at recent rhetoric from Draghi, he did note that the bottom line in terms of policy is that we remain confident that as conditions continue to improve, the inflation rate will gradually pick up at or converge in a self-sustained manner. And with our confidence that we should remain patient, because this is going to take time. Now, with that being said, I believe that him also giving out some messages to the markets that, yes, this is going to take time. So essentially, QE will take time before they start to look to pull back and taper that. So with that being in mind, if that does remain to be the case, and they hold fire in terms of quantitative easing, that could very much weigh on the euro. As a reminder, I've noted the past few weeks that technically much of the participants in the markets are still watching that daily head and shoulders, and we're still, as I say, in that right shoulder at the moment. It's waiting to break that neckline, which sits just below the 117 figure, which really could open the doors for 114, and if 114 is breached, then 111 potentially. So potentially some euro weakness here to come. Other than that, that's it from me. I hope you have a smashing trading week. Thank you very much.